We're told here that Paul is a single parent and that he earns 52,000 per annum. So we're asked to calculate his tax liability. So since budget 2023, a single parent who's the primary carer of a child has a standard rate cut-off point of 44,000. So that's what we're going to apply to Paul. And what the standard rate cut-off point effectively means is that he can earn up to that amount and pay tax at the standard rate, which is 20%. And that anything over that amount will be taxed at the high rate, which is 40%. So we're going to plug those figures into our calculation and see what we get. So 44,000 multiplied by 20% is the amount he will pay at the standard rate. Okay, so we're just going to work that out, and that works out at 8,800. The balance of Paul's wages then, which is the difference between the 52,000 that he earns and the 44 that we've already taxed, is 8%. And that 8,000, and that 8,000 is going to be taxed at 40%. So 8,000 by 40% works out at 3,200. So when we add those together, we get his gross tax for the year. And that works out at 12,000 euros. So the tax system has tax credits, and the aim of the tax credits is to reduce down the amount of tax that an individual pays to as close to zero as possible, but not beyond zero. Okay, so a tax credit, if you haven't paid tax, you won't get tax back. So in this case, Paul, as a single parent, is entitled to a number of tax credits. Okay, so he is entitled to the single person tax credit of 1,775. He is entitled to the employee tax credit because he is an employee of 1,775. And he is also entitled to a single person with child tax credit of 1,650. So when we add all of those up, they will reduce down the amount of tax that Paul pays during the year. Now remember that this tax is paid using the PAYE system, so the pay as you earn system. So he won't get a bill on the 31st of December telling them to pay his tax. It will have come out of his wages every week. So over the course of the year, Paul will have paid 6,800.